In this video, traders, let's talk about how we grow a small account. Stay tuned. Hey guys, warm welcome to you. All right, so growing a small account, super popular topic for many traders because let's face it, many traders don't start off with a lot of money. And in fact, guys, it's not a bad thing because I know many traders who've started off with a couple of 100 grand and lost it. So you're better off losing 500 bucks, 1,000 bucks, 2,000 bucks and going, oh, you know what? I need to learn from that than you are losing $200,000. So small account. Now, the thing is with a small account is if you're looking to grow a small account into a large account, you are going to have to be prepared to take a lot of risk and be prepared for the consequences. So in other words, regardless of whether you've got a 500 buck account, $1,000 account, $2,000 account, $200 account, I don't know if you can trade $200 account, but whatever it is, a small account, let's assume it's $1,000 now, just in the middle of the range, $1,000 account, you are going to have to be prepared to lose that money. Because let's be honest, you are not going to be able to grow that into a $50,000 account, say, or even a $20,000 account by taking little tiny trades. It will take you ages. Now, there's nothing wrong with it. Let me just kind of have a caveat here, guys, and say, hey, I don't think you need to necessarily go from 1 to 10. It doesn't make that much sense. It's not that good of a trading practice. You're better off getting the experience and using those trades to learn and making that £1,000 account into a £2,000 account over 6 months, over a year. That's more methodical and something you could easily do with a 200 grand account. You can double a 200 grand account over a year. So I'm not saying we should do this, but I understand why some people want to go, hey, I want to get up to a decent level because you know, if you don't get to a decent level, then you kind of think, well, is it worth doing? Is it worth even trading? If I'm making $1,000 a year, 100 bucks a month, and I've got the, you know, is there much point in it? So I get it. So let's put aside the perfect scenario, which is learning to trade on a small account, regardless of forgetting about the P&L and just learning and learning and learning and learning. Forget about that. Let's just talk about how we would do it. If we're going to do it now, $1,000 account, get up to 10 grand. Well, do you know what you've got to do? You've got to take risk. That doesn't mean taking risk just massive amounts straight away. What it means is this, is trading for a period of time, say a month, with low risk. So first of all, we've got to find a broker that you can get some good leverage with, because you're going to need some leverage for this strategy. So find a broker you can get some good leverage with, trade very small for a month or so, and start to note down what is a good strategy for you that works well. Let's say it's a trend trading strategy. Let's say it's buying a bull flag, whatever it may be, trading your currency pairs. Most likely it's going to be in Forex, guys. Trading a currency pair, bull flag, bear flag, after news, whatever it may be. So when you're in that scenario, start to highlight what are the good things about those trades that you take that work well. What are the bad things? Now you've got your perfect trade. And I say perfect with a pinch of salt, there's never a perfect trade, but for you, that's the trade that's going to make you the most money. And so what you'd now do is you'd now start to risk more on those trades. And you'd have to risk, you have to throw the textbook out the window, guys. 2% risk, 1% risk, you're going to cut it. You're not going to make enough to get yourself to the $10,000, $20,000 from $1,000 account by risking 1%. So you are going to have to go in pretty heavy and start to risk almost all of your money on some trades. Now, yes, that may mean that you're going to lose it, but hey, there's no free lunch, guys. If we could all turn 1,000 into 10,000 with no risk, we'd just do it with massive amounts of money and be hedge fund managers and say, hey, stick £1 million with me and you will be super, super rich within a year. So we know that's not the case. We know we've got to take some risk. So we identify the strategy that works well, and then we start to dial up the risk on that strategy. But not only that, but we try to find a strategy that actually works well when the market goes off on a run. So in other words, it's okay you saying, okay, I'm taking a mean reversion trade from setting the highs, double top back to a midpoint or whatever. That's fine, but you've only got so much room you can make in that, and you're limited by the size you take on the trade. What you're looking for is a trade that works well for you, that's actually one that explodes, one that has the potential to run on and on and on, whatever parameters may be for that. Whether it's a bull flag, bear flag, after news, breaking resistance, breaking support, breakout, whatever trade it may be, something that's got potential to be a runner. Because you need that, because what you're going to do is, as the trade goes in your favor, let's say you've made $500 on your $1,000 account because you've been leveraged right up and you're prepared to take the risk that comes along with that. Don't forget, guys, there's risk in this. You then use that extra margin to add more at the right time. So you wait again perhaps for a pullback, you add more to the position, it goes your way, you add more. You're adding more as the trade goes in your favor, using the unrealized P&L to leverage back in to increasing your position size. This is not pyramiding in as the market goes against you. You don't have the funds for that. This is pyramiding in as the market goes in your favor, using the unrealized P&L as more margin. Now listen, this is super high risk, but you know this. You know this is high risk because that's the only way to quickly make an account grow. And the chances of blowing up are super high. However, if you do this, let's say you drag your stop up. Let's say you drag the stop up to break even as soon as you can, so you're protecting that 1,000 still. And let's say now you're in a bigger size, now that it's going $2,000, $3,000, you know, you can look for that and keep adding. If it's the right scenario, you get that blow off top to it, you can then maybe make that 1,000 into 3,000, and then you wait for the right conditions again. Maybe make the 3 into the 6, maybe make 6 into 12. So you're trying to find the optimum conditions, number one. You're trying to find a setup and strategy that has the potential to run on and on and on and allow you to add and leverage on that, number two. And then number three, you're looking to do that again and protect the risk. You don't want to end up wiping out your account if possible. So as soon as you have that profit in, lock in that grand, then add more to the position, look for the extreme. Be prepared to be stopped out many times. But when you get the one that's runner, one that is a runner, you're going to be in a full size position and it's going to be able to maximize your account. Like I say, definitely don't recommend this. The chance of loss is super high, but I know it's something that people have been asking. I know it's something that people want to do. I thoroughly recommend taking your time with trading, because you're not going to use this strategy in trading when you've got a $50,000 account or a $100,000 account. You're just not going to do it. So bear in mind, this is a very unique time you'll be doing this, and you're better off learning the skills, etc., etc. But if we put that aside for now, that is one way of boosting your account up quickly from a small account to a large account. Take care, guys. Bye-bye.